Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. How you doing out there? Ooh, looking right. By the way, I'm going to get, Holly's going to come by and help us with the lights. It's going to be great. She knows all about that. She was she did the Hooters calendar and all the hospitals and stuff. She knows how this works. Yep, she's going to help us out. I'm going to look like a Hooters girl, man. It's going to be great. Hey, welcome to the Closing Beat, everybody. We are financial advisors here at Jazz Wealth, and a little bit offbeat, as you might have figured out by now. We like to talk about the stock market here because we are advisors that actually manage our own funds. We do not hire outside people to manage our funds, unlike most advisors out there, which means we don't have a lot of free time on our hands because we like to participate in the market. We like to see what's going on, make adjustments, provide the added return where we can. And we've got a lot to talk about here today. First, I got to get this off my head. You guys are going to laugh at me because I'm just getting caught up on this, but Cody, are you on any camera here? Can I hit a button?
Yeah. Yeah.
Cody?
Yeah, that's me.
Oh, he's a Cody button.
Hey.
Okay. Aliens.
Yeah.
They're real.
They're just real. Yeah.
Turns out they're real.
Guy said it under oath. Couldn't have been lying.
Like, it's one thing if it's a conspiracy thing, but dude, this is a congressional approval. Like, they're real.
Yeah, no, they're here. And they, do you see the one with the ship? It's like 100-yard.
No, see, I don't watch the other stuff because now my Instagram and everything is like, oh, you're an alien guy. No, I just want to see the hearing. The guy literally said, yeah.
I thought that was from the hearing. I thought they said they had the big ship that was like 100 yards long, but I could be wrong.
Oh, don't ruin it. I haven't gotten all the way through it yet. I was just catching up on that the other day. I'm like, are we not going to talk about this?
We should start a new segment where we talk about the news, but like 2 weeks too late.
2 weeks later, yeah, because if it doesn't have to do with the finances, unfortunately, I don't usually pay attention. But like aliens, it just blew my mind there. And so I started bringing it up. I brought it up to a friend last night, and he went off on this whole thing. I'm like, wait, I don't want to hear your thoughts. I was just talking about the guy that said, yes, those are non-human biological parts. How is that not a thing? Was it a thing? Did I miss it? Was that like a thing in the news and now we're just done with it? It blew my mind. That's what happens when I watch the news. See, I only participate in like the finance stuff. Anything else I'm clueless on, and then I see it and I'm like, is that a joke or was that real? Turns out it's real. Anyways, what also is real is the market fell today. And we're going to play the conspiracy game here a little bit as well, because the timing of this doesn't quite add up here, and I'm going to lay it out. You make your own decisions. The S&P, we gave up 13 days worth of work here in one day. It's the first close below the 20-period moving average. In other words, the 20-day average performance. Today, we went below that for the first time since May, actually. So getting our pullback there. What? What's the problem? What's the problem? What are we doing? Oh, coming in strong today. Okay. Oh, I was excited. Okay. Well, that's great. Oh, well, whatever. The NASDAQ, I get excited on the down days. All my friends text me and they're like, America, they know that I love the down days. It's when you get the discounts. Anyways, the NASDAQ, 14 days erased, right? All in one day there. First close below the 20-day moving average since Star Wars Day. I'll let you guess what day that is. And I'm just going to mute that so we don't hear any problems there. So beginning of a pullback there. Look around to the Russell. Not as bad. Small caps, remember, have been a little bit stronger. Look at the Dow. We're back on, we're working our way back inside of that range. For now, the breakout continues to be an accepted technical pattern that people will believe in. But we come down to the S&P pulling back. It's like, okay, is this for real or is it not for real there? Here's what happened. I'm going to let you make your own decisions on this one because this is our talking point for today. The S&P was downgraded, or their debt was downgraded for the second time ever in history. 2011, if you were around for that, well, then you lived through the first time in history there. I do remember that actually, but today, yesterday, Fitch downgraded from AAA, which is the highest rating they can have, to AA+. And I don't remember them having a plus in theirs, but apparently they do. Here's the question. First of all, let's just go right to the source, and you guys have fun with your little thoughts and conspiracies here and all this stuff, because I just want to share something with you. We're going to go over here. This is directly from Fitch. So look, here it's their website, Fitch ratings, okay? This was published yesterday at 5:13 p.m., right at the same time we were doing this show. Did we just all of a sudden say, oh my God, the futures markets are falling apart? No, it was published. And the futures market did go lower overnight, but it recovered all of it. And we wake up today, and all of a sudden, it's a big deal. It was old news. So number one, it was published yesterday. That tells you that people are looking for a reason to get out of the market. They're looking for a reason to take profits. They're also focused on headlines. They get emotional when financial media focuses on one thing so hard, because this news came out yesterday. You know how when there's earnings that come out and the stock just takes off or falls real quick? Yeah, that's because you'll never be the first to see the news. There are people who their livelihood depends on them being the first to interpret the news. There are algorithms that respond to this. Why were there no algorithms that responded to this old news? Why did it not happen until first thing today? Very, very interesting there. Now, I want to point out just one thing. Can we just do this here? I'm not going to waste your time with anything that's not important. All right, so they go into their whole downgrade. You can read through the whole thing. It's on their website there. Here's the reason why they're talking about downgrades there. United States, we downgraded it basically. They expect a fiscal deterioration over the next 2 to 3 years, find high and growing general government debt burden, okay, and the erosion of governance related to their competitors, people that also have AAA ratings, other governments and their debts as well. That's what they're saying here, related to their peers over the last 2 decades, that has manifested in repeated debt limit standoffs and last-minute resolutions. That's the summary of then everything that they itemize here, okay? So they're just going through saying these are the things that really bug us and why we're going to downgrade anything. There is literally nothing in there that is new news. Nothing. Like, they didn't just say, well, because the interest rates have now reached a level that we haven't seen in decades, we feel like that's the problem and it's going to hurt debt and all that. No, they didn't say that. There's a comment about rising rates, but they didn't say that that's the reason. They go on to say that it's basically because the government can't spend their money correctly. They argue over the debt ceiling increases. And by the way, they're not increasing it enough to offset the spending that they want to spend, what they call mandatory spending. So none of that is news that they couldn't have used. You could have said this downgrade anytime in the last 2 years, and it would have been relevant. We already know all this news. It's already there. So why choose now to downgrade the debt ceiling there, or to downgrade their debt? That is very curious. Literally, read through that. There is nothing new. And yet today was the best day to do it? I wonder why today was the best day to do it. You have any ideas why today was the best news to do it? Also, the point that I made a second ago, futures sold off a little bit and then they recovered, the overnight markets, right? So they digested the news and said, it's not that big of a deal. We came to the markets today and said, that must be bad news. I see the headline, but I'm not going to read the article. I'm just going to take the People's TV words for it, and I'm scared. Come on. I don't know, man. So there's 2 things that are either going on there. 1, very clever timing by Fitch, or 2, it's proof that you guys, which is bad news was really good news for the headline, the financial media, it proves that you just read the headline and go, well, that's what everybody else is doing, so that's what I'm going to do. That means that they can continue with that. And if there's something wrong with Costco or Tesla or something, that means that the headline is the most important thing. And the tone of the headline can cause you to make decisions. That's proof right there that literally that's what's going on. Now, that's just my opinion. I don't like to share my opinion often on this show because it's irrelevant, right? But those are facts based on what happened. And you're probably more interested in what happened last time. So was it catastrophe? Was it chaos? Was it a rally? When the I keep saying debt ceiling. When the debt rating, credit rating, was downgraded. What happened? Well, let's go take a look. All right, so here's the last time this happened. So in 2011, it's the only time that we have to go on. This did happen. I thought it'd be fun to look back 1 year and 1 year forward, right? Just gives you a nice window of opportunity. We can do this 2 years if you like, but we just did 1 year for today. Okay, so here we go. If you look back 1 year before the first time ever in history, the debt ceiling was, darn it, I'm going to say that all day. The credit rating of the U.S. debt was downgraded. All right, we started off a little bit lower. We had ourselves a nice rally. At one point, the S&P was up 20%. It started falling ahead of the debt downgrade, okay, and sold off, erasing the entire year's worth of gains. Over the last 1 year, it gave all that back due to the news that the debt was downgraded for the first time ever in history. You remember that? The whole debt ceiling argument and stuff? I believe they actually announced this in the middle of the night, by the way, if I remember correctly. Nonetheless, you go 1 year forward, turns out it wasn't a big deal. Volatile as all get out right in here in that first 3-4 month window, but ultimately we recovered, everything was fine. We had numerous pullbacks for people to digest whether they wanted to buy or not. We had numerous rallies for people to participate. We had one last pullback here and another rally. Ultimately, it wasn't that big of a deal. Now, in the light blue, we have our current market. So a year ago, we had a slight gain there, and then, of course, 2022 was a bit of a rough year. We've got the what turned into be the October low. We started a little bit of a rally here. Oh my God, this is getting great. This is too good to be true. Interest rates are rising. Everything's good. Oh, it's not going to be a problem, right? Then we have the downgrade. Okay, so it's a comparison of what's to happen. Now, it's one data set. I really don't like using one set of information or one time period to make a decision going forward. There's no average. You know what I mean? It's just hard to do. It's like when I shared this chart with you where we talked about at the end of Fed rate hikes, what happens? Okay, it's only 6. That's not bad, but it's not really, we're not going to like make major decisions based on that, right? So we've got one data set here. This will be the second time ever in history, both that we can look and see what happened a year back. Now we'll see what happens going a year forward. I just want to point out, last time all the year-to-date gains were wiped out. I don't think that happens this time, right? Or not year-to-date, 1 year. I don't think that happens this time. This debt ceiling downgrade thing, at some point, will probably be promoted on TV as a non-event, a one-day thing, right? And I want the markets to pull back, but ultimately, this is not that big of a deal, right? Now, we don't want a downgrade in our debt, of course, but the way it was handled here shows that it's really not that big of a deal. It may provide some discounts here, and I certainly hope so, but that's where we stand. The really bad news, unfortunately, is for rates. Have you seen the rates, by the way? So where are we at on the 1 year? Is it over 5.4 yet? Hold on, let me have some fun with this here for a second. Nope, that's not going to be the one. Where in the world is this here? I believe, oh, here we go. The 1 year Treasury, 5.38, about 5.39 is where that thing is trading. For a 1 year. Can you imagine that? We're darn near about to hit 6% rates on CDs. And really, the trouble is we have prices falling apart. The bond portion of your target date funds, please don't use target date funds if you don't have to. If you're forced to, I get that. But if you have other options, don't use those. The bond portion of your target date fund is taking it on the backside, man. It is incredibly, incredibly weak and has been the underperformer, causing your target date fund to underperform every other choice that you have. So certainly something to help with. By the way, on the Friday podcast, I'm going to go through exactly how we build the portfolio and figure out what its optimum performance is. It's not magic. It is essentially a visual, we took an algorithm and put it into the visual way to see it. But how do you know that 34% in this and 22% in that and 18% of that is the best way to go? Why is it not 32% and 21% and 17% and so on and so on, right? So I'm going to go through and show exactly how we do that to hopefully convince a lot of you that this target date fund, that's a lazy, lazy choice. So stay tuned for Friday on that one. Bonds falling apart there. We even had crude oil pull back here today, which is fine. I don't think anybody cares about that. It had a really nice rally. Don't fight the trend on crude oil. Let it pull back if that's what it's going to do. We also had the crude oil numbers come out today. I didn't get a chance to look at them, but just wanted to point that out. And man, what a world we live in, right? That's an incredible world we live in. So on a political standpoint, we got what? Trump indicted for whatever. I caught up with the news, right? So I'm a little bit like, I'm not sort of fine-tuned, but you got Trump getting indicted. Biden's clearly doing something we don't know. They're all sort of messing around. Politicians are trading like crazy on all this news. Probably knew about the downgrade before everybody else. We have aliens, right? Gee, and really curious timing on this one here. So I'm a little worked up by how this was all done and the response by the novices out there. That's really, really interesting. But I just think, man, like, what a great time to live. It's just incredible what's going on out there. I love it. And we got political season coming up. Jeez, this is going to be great. Okay, let's take a look at some stocks in the news here. Humana, these guys make a lot of money off of us for paying our health care there. Their beat actually came, this is really interesting, their beat came from better than expected growth, specifically in Medicaid sales in Indiana and Oklahoma. I don't know. That's not new markets for them, so I don't know what's going on there. Otherwise, they beat on earnings. Very nice little recovery here. Trying that, you guys like your gap fills there, so a little more work to go there if you're a technical trader. But that was an interesting one because I don't fully understand why the beat in those two states. Great reversal on Kraft Heinz here. It wasn't all good news, to be honest. I didn't think it was all good news there. Prices are up 11%. For their products. Sales here in the U.S. are down about 7%. You see the offset there is obviously helpful for them, so they were still able to keep consistent. Maybe that's what everybody was happy about. Yum Brands. This is KFC and Taco Bell and Pizza Hut and probably somebody else. But anyways, KFC was the reason that they beat there. Sales at KFC up 11%. Well, who eats at KFC? Like, I don't think I've ever eaten at KFC. Not that it's bad, it just doesn't seem appetizing to me. Pizza Hut and Taco Bell sales were down. I have the same comments about those two as well. As a kid, man, I ate me some Taco Bell now, but as an adult, you gotta make better choices, you know what I mean? Generac, remember these guys during COVID? Oh, the world's gonna end, I need a generator. They killed it. They had so much production, they didn't know what to do. This is really the response of all that fading away. Sales are down 23% compared to last year, but it's almost not a fair comparison because we're comparing it to the spillover from COVID. I think these guys got a little bit bad response here. And as I was reading through the earnings report, I thought, okay, that's not fair. There may be some opportunity here. And then they said, by the way, expect our sales to be lower in the second half of the year. And I'm like, okay, well, you did it. You guys did it to yourself. Starbucks. Total store sales missed overall. By the way, so they break out their sales in the US, China, and other places. I always look at China. China was the helper. It was like the saving grace here. Store sales in China up 46%. They're loving some Starbucks over there. In the US, the average ticket, so remember how I always pick a stock and I say, well, what's the metric that people like to look at? In names like this, it's the ticket sale. It'd be the same for Target, it'd be the same for Home Depot. I always point those things out. Ticket sales up 6%. In other words, 6% more tickets went out. Transactions, sales. However, the price, no, I said it backwards. The price for each ticket was higher. People spent a little bit more money, but we had less tickets generated. Sorry, I said it backwards there. So that was that one. There's a lot of other earnings we could go through. Tons of them, to be honest. There's at least 22 of them on my list here. We covered the bigger movers for the day. I don't think I covered EA Sports. Big move in EA Sports, down 7% back to the 200-day moving average. That's just kind of interesting from a technical standpoint and really a non-event out of pins. I forgot the names that you guys mentioned yesterday that some of you were thinking about before earnings, so I'm pretty sure it was not any of the ones I covered, but if they were, or if they're not, just bring it up and I'm happy to talk about it. Do we have a leaderboard for Guess the Dow?
Not visually, but if you would like to know the names, I can hit you with some names. But not,
Yeah.
We don't have anything to show today.
Okay. All right. Well, are we working on that?
To show?
Yeah.
Yeah, definitely tomorrow.
Could we do like a daily leaderboard provided that Kevin's here?
Provided that Kevin is here, yes, we would have had one for sure.
Kevin had to pick up his grandma, right?
Yeah. Kevin's out today, but yeah, we got a couple. We got Eddie, Dan, Bev, Daniel, and John all at the top there. I don't know, pretty vague names. I guess people don't really know if that's them or not. But yeah, they are up there.
And are we sure that this was the day that Kevin was supposed to pick up his grandma?
We are. Yeah, we're pretty sure. Yeah.
Okay.
Yeah.
Just thought that was funny. The other day, Kevin's like, I might have to miss a Wednesday. I'm like, which Wednesday? And he's like, I'm not sure yet. My grandma's coming and I got to pick her up and nobody knows what day she's coming. It's either last Wednesday or this Wednesday. And I'm like, does your grandma know what Wednesday she's coming? Well, she's not sure either. I'm like, okay, well, that's kind of scary. Anyways, there you go. So that's our markets for today. I really wanted to focus on the downgrade there because that got me fired up, man. Like, we are all looking over here. Like, we're playing checkers, they're playing chess, and we got to stop that game there. So tomorrow, earnings-wise, we got ConocoPhillips in the morning. Anything energy-related will be the focus, especially after the last couple of days. So ConocoPhillips reporting there, and then after hours, you're going to have Amazon and Apple, which will be the headline for sure. So will you read the headline or will you look deeper and see what's going on there? That is your lesson. Also, Booking Holdings and Square, or do they call themselves Square anymore? No, right? Block. It's Block. It's not Square. They're a Block. So there you go. Shopify earnings preview. I didn't get to that one, did I not? $7 expected move, and it moved about 5 or so. Yeah, they made more than they did last. They've made more than they did the last couple quarters. But I didn't look into the geeky stuff for you. I'm sorry about that one. There was so many of them. I didn't catch them all. Yeah. Stay the course. Ignore the news cycles. It's tough. You know, I get it. Not scary as family human stuff. Well, I could understand if grandma wasn't sure what day. You know, my grandma would have done the same thing, but the whole family was like, it's either this Wednesday or next Wednesday. I'm like, what are you just gonna show up at the airport and see if you see her? And it's kind of funny. You calling for a Santa Claus rally this year? Otherwise, no, we've got true manipulation. Ooh, try not to be that guy. It's hard these days, right? Man, I started watching the thing about the actual hearing. It's a long hearing. I was trying to watch the whole thing and be informed, and I couldn't watch the whole thing, but yeah, it's crazy. Hey, you sold a put on PayPal today. Okay, cool. Let's see. 35, no, not 35, right? It's at 73. Don't do that. You might have typed the wrong number, right? Yeah, you didn't do one at 35. We love the short-term bond market. It's a heck of a trading market, I'll give you that. But you got to be into that kind of stuff. PayPal 65 strike. Okay, now we're talking. September 18. I don't see that either. You having problems typing today? I'm going to pretend you meant to put the $15 strike. That makes sense for getting a 145 on that one. I think that's probably what you're saying. You got a $6 move there, and you're fine. I mean, for the moment, you're fine. I don't think the earnings call has started or anything. No trouble just yet. Not the greatest move ever, but what's going on with Disney? I know, man. Remember, like, it's been over a year. No, it's been over 2 years and now I'm down to 300 shares. I had 400 shares. I was selling calls, trying to get out of them. I guess one got exercised along the way. I just keep selling calls. One expires, I sell another one. I've yet to get called away, and it just refuses to move there. They got a lot going on there. Working on some things with ESPN and maybe getting back to their roots a little bit. I celebrate that. I'm good with that. That's going to take some time. J-Dub, let's see what happened today. Eric was going on about his NVIDIA. There you go. Okay, cool. Does NVIDIA get back to 490? Well, you're short the calls, right? Did I misunderstand you there? I don't think it gets back to 490 quickly, no. Cool. Okay, BNS, see what he says on that one. 47, you want it under 47? Well, if it does, that's kind of the start of a new move, isn't it? So look at this range of just boring sideways, pretty much equal highs and lows. If it gets under 47, I don't know that that's the time you say, oh, now I want it, right? You might have yourself a little flush out there. Yeah. CVS had good earnings. Yeah, and they also are going to stop their their transformation into being more drug related. I don't know why. I didn't catch the reason why on that one, but That's obviously something to celebrate because they were spending a lot of money on that and had projected over the next 2 years, no, end of 2024, to keep spending money on that. So that's kind of like Meta with the metaverse thing. They said, we'll come back to that. We see that people aren't all for that, selling our stock and whatnot. J-Dub doesn't want 490. I don't think you have a problem there. I honestly don't think you have a problem. I would have no problems sleeping at this point. Before, maybe a little bit. Gotcha. I gotcha. Thoughts on title. So this one really hasn't, this is not something I would mess with here. This is specific to, this is the covered call thing on Tesla, isn't it? What the hell's going on here? That's not one I would look at there, personally. I think you stole your Meta's tagline, efficiency. Yeah, it worked though. You know what I mean? They knew what to say. Oh yeah. Apple and Amazon preview. We could do that. Let's go over here real quick. So those are the big names tomorrow. Apple's the consistent one. So they beat 88% of the time on earnings. Performance-wise, it's 50-50. So over the last 8 quarters, it's been up 4 times and down 4 times in response to earnings. Amazon is a little bit more clear. They only beat 62% of the time. That's not totally fair because you're looking back to the years where they didn't care and they were just growing. So a little bit of a skewed number. If you were to shorten the timeline and say, hey, how about just over like the last 24 quarters or something, I think you'd see a different number. But Amazon historically is lower on earnings. 6 of the last 8 earnings reports, the stock has been lower. Only twice has it been higher. So a little bit of a weak record going on there. You want to add to AXP, American Express. What's the reason? You know, like what you're commenting on there is a broader picture. Nothing wrong with that. It's just a broader picture. So in the short term, would you add right now based on your theory? I would not, personally. Yeah. You want these solar companies to start getting that Inflation Reduction Act money that now I'm all fired up. That has nothing to do with inflation, all solar money there. I think it was November for Solar Edge and October for Enphase maybe. Is that what it was? QCOM, slow cell phone sales there. I think that may be foresight for Apple tomorrow. I think it's already affecting them just a little bit, right? Oh, what's going on? I am not getting data, after hours data on Apple, so I don't know. I believe it was already affecting them a little bit because I saw it pop up, but I'm the wrong one to ask at this moment. Sorry about that. So I'm getting the data on QCOM. 120 after hours. Good reversal tomorrow. Wow. Got bonds as a ballast. It's a trick is just pricing them. How do you price that thing? Or how do you decide that that's where you want to be? Price-wise, not yield-wise. Yikes. All right. I hope you learned something here today, and I hope you'll take a second to read the downgrade there and see for yourself that there's nothing new in that there. It's just coincidence. We'll call it a happy coincidence that they decided to announce that today versus 2 years ago, a year ago, 6 months ago, 5 days ago, anything, right? So I think we're going to hear more about that one. All right, I'll wrap it up there and end the day of conspiracy. We'll see you tomorrow, and hopefully with some different news and more things to focus on. Of course, Apple, Amazon, everything else going on out there. I'll be back. You enjoy the rest of your evening, and thanks for watching. See ya.